I'll share a little bit of my experience. I'll share as well as a little bit about my background, and hopefully we'll get you from a standpoint of changing your mindset, talk a little bit about going into the marketplace, the new asset class, and then being able to protect your assets from that standpoint. For anyone that's in here, I'd like to get a hand. If you could raise your hand and let me know, do you own any digital assets or cryptocurrency today? Oh, good. We have one person, two people. All right, great. That's good to see. For the majority of you, this is probably the first time or a few times that you have heard anyone speak about the particular asset class. I would say because of my 27 years of being in the IT industry, many of the people that are not engaged into the asset class right now have a mindset of, is it real? And I'm here to tell you that it is truly real. So with that being said, I will play a short video. It'll give you a little bit about me and my background. I'll talk a little bit about being a Bitcoin mentor. From there, I'll speak a little bit about what I have on the board. And then I will also give you a video relating to a particular wallet that I would like to share with you from that regard. Welcome back to the channel. If you're new here, I'm Terris Foley. And today we're diving into some crucial aspects of Bitcoin ecosystem that every user should understand. Keys, backup, wallets, and multi-sig wallets. Whether you just bought Bitcoin for the first time or you're looking to... Can we turn that up? This video is for you. But before we begin that, let me tell you a little bit about myself. I've been in the information technology field for 25 years, traveling worldwide for work as well as pleasure. As a father and grandfather, I cherish spending time with my family, especially on the holidays. My business information systems degree serves me well in the ever-evolving IT. Is that all we have? I presently reside in Las Vegas, Nevada, and I currently speak English as my only language. However, I am embarking on a journey to learn Spanish. My Bitcoin journey and lessons learned. Back in 2010, while working in the United Arab Emirates, I stumbled upon Bitcoin when it was approximately about 40 cents. Obviously, I bought a significant amount when it could have been a very life-changing event for me. Unfortunately, because of my lack of knowledge, I sold everything upon leaving the UAE in 2014. Fast forward to 2021. Bitcoin was back in the news, reaching several highs, somewhere over $69,000. That reignited my curiosity, and I dove headfirst into learning everything that I could. I enrolled in several different blockchain courses and certifications to avoid repeating my past mistakes. Why would I make a great Bitcoin mentor? My solid tech background and blockchain certifications provide a strong foundation, but even more valuable are the expensive lessons learned through my own mistakes. I understand the pitfalls of being an uneducated investor, like sharing private keys, which can lead to devastating losses. Over the past year, I've become a firm believer in Bitcoin's potential as the soundest money ever created. Books like The Bitcoin Standard and The Creature from Jekyll Island has shaped my perspective. Listening to Michael Saylor further solidifies my conviction. I'm now an affiliate of Swan Bitcoin, helping others adopt a stack and hold strategy. You can find my website at swanbitcoin.com/Terris Foley. Today, I'm a vocal advocate of Bitcoin. I share my stories, the lessons that I've learned, and the importance of avoiding impulsive altcoin investments. My transformation in a journey of understanding. My journey into Bitcoin maximalism wasn't instantaneous. It was fueled by curiosity, experimentation, and a growing conviction about truly understanding Bitcoin, not just as a store of value, but as a revolutionary force in how we interact with the digital world. Understanding keys, backups, wallets, and multi-sig wallets. First up, let's talk about keys. In the world of Bitcoin, keys are fundamental. There are two types of keys that you need to know about. First and foremost is the private key, and second is the public key. The private key is like the password to your Bitcoin. It gives you access to your funds and allows you to make transactions. This key must be kept secret at all times. If someone else gets your hold of your private key, they can steal your Bitcoin. The public key, on the other hand, is like your bank account number. You can share it with others to receive Bitcoin. It's derived from the private key, but you can't reverse engineer the private key from the public key. Next, let's discuss backups. Backing up your private key is crucial. Imagine losing access to your Bitcoin because your computer crashed or you lost your phone. That's where backups come in. There are several ways to back up your private key. You can write it down on paper, store it on a hardware wallet, or use a specialized backup device. The important thing is to keep your backup in a safe place, away from prying eyes and potential disasters like fire or water damage. Now, let's talk about wallets. A Bitcoin wallet is where you store your private key and public keys. There are different types of wallets, each with its own pros and cons. Mobile wallets are convenient for everyday use, but can be less secure if your phone is lost or hacked. Desktop wallets, on the other hand, are more secure, but still vulnerable to malware and physical theft. Hardware wallets offer high security by keeping your private keys offline, making them immune to online hacks. Paper wallets are simply printed on a piece of paper where your keys are on them. They're secure from online threats, but can easily be lost or damaged. Finally, let's cover multi-sig wallets. Multi-sig stands for multi-signature. These wallets require multiple private keys to authorize a transaction, adding an extra layer of security. Imagine if you have a vault that needs 2 or more keys to open it. A multi-sig wallet is similar to that. For example, if you could set up a 2 or 3 multi-sig wallet where your 3 keys are created, but only 2 are really needed in order to make a transaction. This way, even if 1 key is lost or stolen, your Bitcoin remains secure. Multi-sig wallets are great for situations where you want to share control of your Bitcoin, such as in a family, a business setting, or leaving a legacy behind. They reduce the risk of a single point of failure and ensure that no single person has complete control over the funds. In conclusion, this is just a glimpse of my passion for Bitcoin and my desire to help others to navigate this incredible ecosystem. I believe that my blend of experience, knowledge, and enthusiasms makes me a perfect fit to become a Bitcoin mentor. Thank you for considering my application. If you have any questions, please leave them in the comments below. And that's a wrap for today's video. We covered keys, backups, wallets, and multi-sig wallets, and how they all play a crucial role in the Bitcoin ecosystem. I hope this helps clarify some of the fundamentals for you. If you have any questions, please feel free to leave them in the comments. Don't forget to like and subscribe for more in-depth explorations of the Bitcoin world. Hit the notification bell and stay up to date on future videos. Thanks for watching, and I'll see you on the next video.
All right, that's just a little bit in terms of being able to get us started here. All right, so again, I mentioned mindset, and I mentioned some books. I'll share a few with you from that standpoint. Have you heard about The Creature of Jekyll Island? This is a book that is very valuable in terms of understanding the banking system here in the United States. The rich continue to get richer. And the fractional banking system is something that hopefully will be decimated at some point in time by the digital asset space. But this gives you a background of how banking actually started here in America after 1929, when we had big stock market crash. I mentioned the Bitcoin Standard as well. This is a great book for people to get an opportunity to be introduced from a Bitcoin standpoint. It talks a lot about the history of money and where money is actually going. It shares with you when money was rocks, obviously the value of gold, and now we're talking about the value of the digital assets, specifically about Bitcoin. For those of us that are in business and looking to prosper, these are two books I think that are good. One is called The Psychology of Money, and the other one is The Illusion of Money. These are great books in terms of being able to change your mindset from that standpoint. Another book is called The Internet of Money. For those of us, again, we started out with fractional banking in terms of having paper money. Money is now becoming digital, and money will also be on the internet. And so we're trying to move you from where we are today to where actually money is going. And this last book is called Plutocrats. Again, the richer are getting richer. They are actively buying digital assets now, while most of the public is not. And so from that standpoint, their mindset is much different than our mindset in terms of where we're trying to go. So I'd like to share those things with you. Again, in the video, I talked a little bit about mindset. So one of the reasons I'm going to share with you, there are 346 million reasons why I'd like for you to hear what I may have to say today. In 2010, I shared with you that I was in the United Arab Emirates. And if most of you don't know that country, most of you know the city of Dubai, right? So I worked and lived there for approximately 4 years between 2010 and 2014. In 2010, when Bitcoin was probably anywhere between 9 to 30 cents, I purchased somewhere around 2,000 or 2,500 Bitcoin from that standpoint. In 2022, Bitcoin went to $69,000. I believe today it's still at $69,000. That was a $346 million mistake that I made in my lifetime. So when I share with you that this is generational wealth that we will be talking about, is truly generational wealth. If I had kept that asset and not sold it, $346 million would have done myself and my legacy great from that regard. So the things I'm sharing with you are real. I've been in tech for 27 years. I've shared with you about books, and we'll talk a little bit about the internet. For those individuals that don't believe that digital assets and the revolution of digital assets is real, we'll go back to where in the 1980s, 1990s, when people didn't think that the internet was actually real. At that particular time, people scoffed at believing that the internet was actually going to become what it actually is today. Most of us today cannot live without having the internet. We research, we do banking, we do medical, we have records. There's so much on the internet today that if we got cut off from the internet, many of us could not do our jobs from that regard. I said that to say that as that evolution is coming, digital assets is on that track. Right now, in terms of adoption, digital assets is being adopted faster than the internet when it was adopted from that regard. So those are some facts from that standpoint. I'd lead with Bitcoin because Bitcoin is the one asset that actually started this $1 trillion asset space. I think it's somewhere between 2 to 3 trillion at this point. Let's see, 2,423,825,364,000. So this one asset, Bitcoin, started that particular asset class there, over $2 trillion. So with that being said, when people tell you or people say that it's not real, there's over $2.4 trillion in this space. I'm trying to share with you that it's truly real. If you've never heard of a company called BlackRock, that might be a company that you may want to take a look at. They are the company that has more assets under management than any other investing firm in the world. They have created what is called a exchange traded fund, where they have Bitcoin or IBIT, which is the name of their particular exchange traded fund ETF. And that particular fund started this year somewhere around January. And in March, it hit highs beyond anything that we've ever seen in the space before. And just, I think on October the 30th, they had 546 million more inflows into that particular fund. So they are banking on the fact that this particular asset will continue to move forward. If this particular company, the world's largest asset manager, has created an exchange-traded fund to be sold to the public, anyone can now buy into Bitcoin from that regard. I'm a proponent that I would recommend that you try to, yes.
I'm so sorry, Terris. I think the ETF thing is such a big deal, but can you kind of explain why it's a big deal?
Oh, man. Big deal. Most people know about the stock market. Most people know about buying Google. Most people know about buying Amazon. Most people know about buying NVIDIA. Most people know about buying, Microsoft or the Magnificent Seven. So now BlackRock has created something to where you now can, with this exchange traded fund, are able to acquire Bitcoin, not necessarily buying it on an exchange, but buying it in an ETF where you're protected and you don't necessarily have to learn how to purchase Bitcoin on its own. You can treat it just like you're buying a stock from that regard. This particular exchange traded fund, it only has cash and only has Bitcoin in it. So that's a big deal. So for those of us that say, okay, well, if I go real technical in terms of why you have to get on an exchange, how you buy it, how you protect it, how you hold it, and things of that nature, you don't have to do that. You can just go through your broker, let's say Fidelity or T. Rowe Price or Charles Schwab, because that asset now is on that particular market. You can buy into that with an exchange traded fund. And that's why that is huge. That makes sense?
And it's also federally approved.
Yes. So it is regulated. So from that regard. So again, for many people think that digital asset class is not regulated. Bitcoin is one that's regulated. XRP is also past that particular regulation. It is considered a commodity, and Ethereum also is considered a commodity. So I have the one of the not necessarily exchange, but this is one of the marketplaces up here on the computer where you can kind of see, again, let's see, can you see? Yeah, on CoinGecko. So CoinGecko is one also, and then there is CoinMarketCap as well. So this is the assets that you would generally see, just like looking at the stock market. These are assets that you would typically see from that regard. Most of you will, since you haven't been involved in the space, I would highly recommend purchasing. If you're going to make your first purchase, I would recommend you going into the Bitcoin ecosystem. One of the reasons why I say that is because there's only going to be 21 million Bitcoin ever mined. It's called a proof of work protocol, meaning that there are thousands of machines all over the world mining this particular asset. When that asset is, there is an algorithm that goes forth that asks questions, and these miners, these computers are trying to solve that particular question. When they solve that particular question, then they get a Bitcoin reward from that regard. And then most of that is being sold, and it goes to the exchanges themselves. All right, so now if we're looking at this, I think that Bitcoin has about 19 million Bitcoins that have already been mined. So there are about 2 million more that will continue to be mined between now and I think the next 100 to 120 years. So with that being said, there are probably 8 billion people in the world, and there's only 21 million of these assets that are being mined. Now, when you look at this and you say, okay, well, I can't afford one Bitcoin at $69,000. You can afford a Satoshi. There is 100 million Satoshis in one Bitcoin. Right now, I think a million Satoshis is about $690 and 30 something cents. So from that regard, so that would be 1 million Satoshis out of 100 million that is equivalates to one Bitcoin. So just so you know. So when you see assets and their costs are very, very high, you don't have to buy the whole asset. You can buy a fraction of that particular asset. All right. Now, with that being said, in terms of purchasing the asset, I'll pull up one of the first places where most people will probably try to go. and purchase. All right, so this is Coinbase.com. For most people that are beginners, this is where I try to get them to start. You'll have to, what you would need is an email address to create an account. Once you create an account and you fill out the information relating to who you are, then they would ask for your bank account. And then you would connect your bank account to this particular exchange, and then you would make your transactions there. So they probably have more assets than many other exchanges that are there. There are other exchanges, but because most people are beginners, this is pretty much where I try to steer them from that regard. Any questions that I can answer relating to that? Yes, sir.
Is Coinbase like I keep hearing stuff like that these kind of websites aren't safe when it comes to like transactions or something like that. Is this website safe enough to like to do Bitcoin selling or something like that?
Well, you would be doing Bitcoin purchasing. All right, or you could if you purchase Bitcoin, you can sell it as well. So if you purchased it and it went up and you decided to sell, you can trade your asset there, and then you would get whatever your profit would be from that regard. All right, so any website on the top left, if you can see, do I have a cursor here? All right, if you see this lock here on the top left, that lets you know that this website is secure. If most websites now today will always have that lock. If they don't have that lock, then it's unsecure. And that is the HTTPS security protocol that runs on that. So from that standpoint, to your question, the site has to be secure first and foremost. Secondarily, your transactions must be secure as well. So they're running a 256 hash algorithm or higher in order to protect that particular website. So in order for you to be able to get your assets, you would gain your assets, buy them, and then I would recommend that you move those assets onto a wallet and not leave them on the exchange itself. Does that help?
I guess. So what I'm trying to say is that's not necessarily the website, but the company that is dealing with these currencies.
Well, Coinbase is one of the originals that are out there. We can go back to FTX if you're leading toward FTX, which was an exchange, which failed, and now Sam Bankman-Fried is pretty much locked up in prison right now, right? So we talk a little bit about FTX. FTX website was secure; they were able to trade, but the individuals behind the company, the individuals that would be behind the exchange, were nefarious, and so they actually moved assets into Alameda Research, into places where they shouldn't have been able to do that, right? So they circumvented the system, they got rich, they paid off quite a few people, and then they had to pay the price. And so now that CEO is in jail from that regard. So, yes.
So in 2010, when you first got familiarized with this,
Yes.
what made you purchase? And then in 2014, what made you sell?
What made me purchase? Because I have been in IT. I'm still in IT. This was something new in the IT realm, and it was explained to me that hey, you could probably do very well by buying and holding the asset. At that particular time, there was not a lot of research or data relating to Bitcoin at the time, and I did not follow it, as I follow it today. What made me sell was the fact that when I purchased it, I didn't gain that much in terms of profitability between 2010 and 2014. The market didn't really start skyrocketing until 2017. Does that make sense?
Like, oh, I'm not making anything.
Right. So what I did was I took some of that money and I started buying some foreign currency and things of that nature. So I've been investing for quite some time. This was one of the assets that I held. I took the money out of this asset class and put it into another asset class. Now I'm putting money back into this asset class, if that makes sense. However, to where I am today is much better in terms of from an educational standpoint than I was at that time in 2010. Any other questions? Yes.
So you said that you could go through Fidelity, you could go through all those other kind of established financial institutions.
Those brokers, yes.
Yeah, so, but is that just because of a safety name known that you would say you could go through that?
Yeah, yeah, because most people aren't really familiar with anything that I'm showing you today, right? And so again, the skepticism is there. If I share with you that if you actually buy assets through Fidelity or Charles Schwab, you feel more comfortable because they've been around for a long period of time. So they're pretty much holding that risk, right? So they're buying the asset, they're holding it, and then they're reselling it to you for you to be able to purchase. So most people would be more comfortable going that route than if I share with you, okay, you've got to go here, you've got to create your own account, you've got to purchase it. Now you have to create a wallet. You've got to pull it off the exchange. You got to put it in your wallet. Then you've got to protect it. And a lot of people may not necessarily want to do that. And these are technical pieces from that regard. All right. Yes.
Regarding the Satoshis,
Yes.
can you explain that again?
Sure. Okay. Let's see here. Let's see.
Would it be like pennies to the dollar?
Yeah, it would be exactly like pennies to the dollar. So they're like 100 pennies to $1, right? So Bitcoin, there are 100 million Satoshis or pennies to equate to one Bitcoin, if that makes sense. So you can buy 30 Satoshis, 3,000 Satoshis, 10,000 Satoshis, up to 100 million Satoshis in order for you to get to one Bitcoin.
So if you were to buy the Satoshi, so it has to be through the ETF or
Nope,
you go straight to Bitcoin?
you would go to Coinbase. You would go to the Winklevoss twins. They have what is their exchange? Gemini. You would go to Gemini. These are all that are historically here in the United States. Then there's others that are offshore. Uphold is offshore. KuCoin is offshore. Kraken is offshore. Those are offshore exchanges that you could create accounts with as well.
But now that there is trader funds like the BlackRock,
right?
It's better, I would think, not to buy it through them.
Yes,
but then they're paying a fee to them.
Yes, and that's why they're selling it to you, because they get a fee. That's right. That's how they make their money.
Buying it on these other sites.
Right. Well, you can buy if you buy it on any of the exchanges. I'll put it up on Gemini. You would pay that fee. But you're not paying it to a broker from that regard, and you are managing your own assets. The goal at some point in time is for you to become your own bank, for you to be able to manage your own money in a way that you can bypass third-party institutions. So right now, if you bank with Chase, and you told Chase that you wanted to buy some Bitcoin, Chase will probably not allow you to do that. If you bank with Wells Fargo, probably not an issue. If you bank with B of A, probably not an issue. But I've seen many of people that I have consulted with, and they have Chase accounts, and Chase has refused to allow them to transfer their money from that regard. So
get the money out of there and you can put it in.
That's correct. That's correct. All right. Okay. I wanted to move over into wallets. How are we doing on time?
We're good on time.
All right. All right. So I wanted to move a little bit about wallets from a standpoint of just letting you know, as I've shared with you, having a mindset change, looking at the new asset class, making purchases, and then you becoming your own bank. And when you do that, you're going to have to protect your assets after you make those purchases. Again, wallets are something that's very critical in this particular theme. We have what is called hot wallets, and those are wallets that are on your particular phone. And then they're called cold wallets. Cold wallets are devices that allow you to move your assets from an exchange onto a particular device. This is a device here called the Ledger. You're able to purchase these type of devices, and you're able to store your assets or your keys on a particular device, on the particular device that allows you to store your assets. They look kind of weird, but they get the job done. So this is a Ledger. So this device here requires codes. I have several others, but this is one that you would control from that. You would plug it into your computer, put your codes in, and you're able to protect your assets from that standpoint. So that's what a ledger looks like.
Then if you lose that, that's it, and you lose your money.
No, you would buy another one. It would ask you for your keys. You would write your keys down, and your keys are what's called seed phrases. So it's going to either be a 12-word or 24-word seed phrase in order for you to control that wallet. So in the event that I did lose this particular device, I can buy another device similar to this, and then when I go to set that device up, it's going to ask me to set up a new wallet or a wallet that's already been set up before. I can take those codes and put it in a new device, and that information is going to come back to that new device. So, and we'll get into this right here just a bit. So I just want to share with you from that regard. Pretty technical. We're getting there. So this is another wallet. This is a biometric wallet, meaning that it will require me to put a fingerprint on that in order for me to be able to manage this particular device. So this wallet is biometric. This particular wallet is a Bitcoin only wallet. This is probably more of a high-end type of wallet. It has a camera on it as well, but you would also utilize this. You would plug it into your computer and then be able to control your assets from this particular device here. Again, if you lost this, you could buy a new one, and then you would take the seed codes or your seed phrases and put it back into the new one, and then your asset would come back. Yes, ma'am.
How much do those wallets cost?
They vary. They vary from anywhere between $25 up to a couple $100.
Where do you purchase them from?
You purchase them on the internet. I have a link to a couple of wallets that I'm an affiliate with, and I'm able to share that with you from that regard. And then the last wallet I'll share with you is the Tangent wallet, which totally looks different than all the other wallets that I shared with you. Looks like a credit card. So you interact with this particular card with your phone, and you're able to store and control your assets with a particular wallet like this, looks like a credit card. This company is very innovative. They also have developed a ring in order for you to be able to manage and control your digital assets as well. So you can actually wear a ring on your finger, and no one knows that that's probably a wallet that you're controlling your assets with. So from that regard. All right. All right. I wanted to show you a brief video in terms of the Tangent wallet, but let's see how long. How are we doing on time? We're still good on time? 15 minutes.
The bird told me food's on its way.
The food is on its way.
Welcome back
Oh,
to the
uh-oh.
Innovators. Today we're diving into a topic that's crucial to both crypto
All right,
traders
that's,
and employees. How
10
you
minutes.
securely store your cryptocurrencies and fortify your crypto fortress. As the saying goes, not your keys, not your coins. Cryptocurrency security is the foundation of a successful crypto journey. So let's embark on a trip to explore the best practices and methods to keep your digital assets safe and sound. Let's get started. Hi there, fellow crypto enthusiasts. I'm your host, Terris Foley. In this video, we'll explore security best practices and tips. Security is not just a buzzword in the crypto world. It is the key to protecting your hard-earned digital assets. For beginners, here are some best practices to consider implementing. Best practice number 1. Use cold storage solutions and hardware wallets. Cold storage solutions and hardware wallets are the gold standard for cryptocurrency storage. Let's say you're a beginner and you just purchased your first cryptocurrency. Congratulations. Now consider investing in a hardware wallet, like the Tangent wallet, the Decent Biometric wallet, the Illapol Titan, or the Treasure Model T. Crypto cold wallets offer several advantages over hot wallet when it comes to securing your digital assets. Cold wallets are offline storage solutions designed to keep your private keys and cryptocurrency safe from online threats. Here are the key advantages of using crypto cold wallets. Number 1, enhanced security. Cold wallets are not connected to the internet, which significantly reduces the risk of hacking and unauthorized access. Your private keys are stored offline, making it extremely difficult for cyber criminals to compromise your wallet and steal your funds. Number 2, protection from online threats. Since cold wallets don't have an internet connection, they are immune from phishing attacks, malware, and viruses that often threaten and target hot wallets. Your cryptocurrencies remain isolated from the potential of online dangers. Number 3, physical separation. Hardware wallets and paper wallets, which are popular types of cold wallets, provide a physical separation between your private keys and the internet. This air gap ensures an additional layer of protection, safeguarding your assets even when your computer or mobile device may be compromised. Number 4, ideal for long-term storage. Cold wallets are perfect for long-term hodling of cryptocurrencies. By keeping your holdings in a cold wallet, you reduce the risk of impulsive trading and improve the chances of preserving your investments for the future. Number 5, offline transactions signing. Cold wallets enable you to sign transactions offline. You can prepare the transaction on a device connected to the internet, transfer it to a cold wallet for signing, and then broadcast it to the network. This process ensures that your private keys remain secure throughout the transactions. Number 6, peace of mind. Using a cold wallet provides a sense of security and peace of mind, knowing that your assets are protected from potential online threats and hacks. Number 7 is portability. Hardware wallets in particular are portable and easy to carry around. You can take them with you wherever you go, and they can serve as a secure vault for your cryptocurrencies on the move. Best practices number 2, back up your wallet. Most cold wallets come with a backup and recovery features such as seed phrases. These seed phrases allow you to restore your wallet and access your funds, even if the physical wallet is lost, stolen, or damaged. While cold wallets offer exceptional security, it's crucial to remember that they require responsible storage and management. Picture this scenario. You set up your hardware wallet, creating a strong PIN or passphrase, and you store your cryptocurrencies. Safeguard your seed phrases in a separate and secure location, and ensure you keep your wallet's PIN or passphrase confidential. Never underestimate the power of backups. Back up your wallet seed phrase or recovery phrase regularly. Write it down on paper and store it securely in multiple locations. like a fireproof safe and/or a safety deposit box. Best practice number 3, be careful of hot wallets. Allow me to explain the disadvantages of using crypto hot wallets. Hot wallets are general wallets that are connected directly to the internet. And while they offer convenience and ease of use for your cryptocurrencies, they come with some inherent risks. Disadvantage number 1, vulnerability to hackers. Hot wallets are multi-factor to hacking attempts as they are constantly connected to the internet. If a hacker gains access to your device or your wallet's private keys, then they can easily steal your funds. Disadvantage number 2, online security risks. Since hot wallets are online, they are exposed to various online security risks such as phishing attacks, malware, and viruses. Even if you have robust security measures, there's always a risk of sophisticated attack compromising your wallet. Disadvantage number 3, centralized risk. Some hot wallets are provided by centralized cryptocurrency exchanges. If the exchange faces security breaches or regulatory issues, your funds stored in their hot wallet can be at risk. It's like putting all your eggs in one basket. And disadvantage number 4, dependency on service providers. Hot wallets are dependent on third-party service providers. If the provider experiences any downtime, server issues, or technical problems, you may temporarily lose access to your funds. Disadvantage number 5, privacy concerns. Hot wallets may require you to provide personal information for account creation and verification, which raises privacy concerns. Additionally, using an online wallet may leave a digital trail of your transactions. Disadvantage number 6, regulatory compliance. Certain hot wallets provided by exchanges or custodial services may require you to comply with strict Know Your Customer (KYC) and anti-money laundering (AML) regulations. Hot wallets, like those on exchanges or mobile apps, are convenient for trading but vulnerable to hacks. Use them for active trading, but not for long-term storage. Opt for the added security of cold storage and hardware wallets. By utilizing a combination of cold and hot wallets, you can strike a balance between security and accessibility, providing the best protection for your cryptocurrency holdings. Best practice number 4, create strong passwords. Avoid simple passwords like 123456 or password. Instead, create strong and unique passwords for each of your crypto-related accounts. Consider using a password manager app like 1Password or Keeper to help you keep track of them securely. Best practice number 5, enable two-factor authentication, 2FA. You've got multiple cryptocurrencies and you want to protect your exchange accounts. Enable 2FA on exchanges like Uphold, Binance, or Coinbase. Use an authentication app like Google Authenticator or Authy, or a hardware key like YubiKey for an extra layer of security. Best practice number 6, practice safe internet habits. Be cautious online. Avoid clicking on suspicious links or sharing sensitive information with unknown sources. Double check URLs before entering any sensitive credentials. Best practice number 7, stay informed on scam alerts. As an enthusiast, you're probably already engaged in the crypto community. Stay updated on the latest scam alerts like phishing emails or fake airdrops. Follow reputable crypto news resources and join community forums to receive real-time updates and stay ahead of the scammers. Best practice number 8, be mindful of mobile wallets. You're on the go and you love using mobile wallets like the Trust Wallet or the Exodus Wallet. Remember, mobile wallets are convenient for small transactions, but consider limiting their use for larger sums. For enthusiasts who prefer flexibility but still want security, mobile wallets like the Zum Wallet, Exodus, or Trust Wallets are excellent options. These wallets store your private keys locally on your mobile device, giving you control over your crypto without the complexities of hardware wallets. Best practice number 9. Use multi-signature wallets. Enthusiasts seeking extra layers of security should explore multi-signature wallets. Platforms like BitGo or Casa require multiple private keys to authorize transactions, reducing the risk of unauthorized access. There you have it, crypto adventurers. Best practices to securely store and fortify your cryptocurrencies for both beginners and enthusiasts. Remember, protecting your digital assets is an ongoing journey, and implementing these practices will set you on the right path for crypto success. Listen, if you have not secured your cold storage and hardware wallet solutions today, check out the links below in the description that provide discounts to the most secure cold wallets on the market. While these best practices and tips can significantly improve your security, remember that no method is foolproof. Stay diligent, educate yourself, and always prioritize security in your crypto endeavors. Thank you for joining us today. If you found this video helpful or informative, be sure to hit the like button and subscribe to the collective for more valuable content. May your crypto journey be safe and prosperous. Until next time, happy and secure investing.
Awesome. All right. With that, I think that the time now, 12:10, 12:09, 12:10, somewhere around there. Again, it's been a pleasure speaking to you today. I hope that I've given you some information for you to consider and ponder in terms of getting into the asset space. Again, because you are business owners and you're looking to prosper and become profitable, this is an area that you might want to consider in terms of making sure that you are increasing your portfolio. Thank you.